Good morning, students. In process costing, today we are going to prepare simple process account illustration sum number 4. There is no losses, but stock of the material is given below. Okay. Ramsons Limited produces a product which goes through three processes A, B, C. Okay. Ramsons Limited produces a product. Okay. That product processed through three processes A, B, and C. What they asked from the following details, ascertain the cost of the production at the end of each stage of the production. Okay, so at the end of each process, we need to find out the cost of the production. Okay, what are the items they have given? Process A, B, C. They have given the items are raw material, direct, the other direct materials, direct wages, overheads, output units, opening stock, closing stock. Okay, so let's listen. There is no opening stock and closing stock for process A account. Okay, and the output unit is 15,000 units they have given. Listen, this output unit means it's a previous process output units we consider as the input unit for process A. So that 15,000 unit we consider as the input unit because it is taken from previous process output. Okay, now it's called as input unit for process A. Let's prepare the process A's account. Okay, let's write the heading, that is a process A account. There is three columns on debtor and creditor side, particulars unit and rupees column, both the side we enter. This is the format. Okay, all the costs what they given in the process A related transaction is to be entered on debtor side. What are the costs we need to enter on debtor side? Raw material, other direct material, direct wages, overheads. Okay, and the input unit 15,000 units. Okay, so all the cost always enter on debtor side. All the expenses will be appears on debtor side. Similarly, as per the format, raw material, other direct material, direct wages, overheads is enter on amount column, and the unit 15,000 is enter on the unit column. Okay, let's find out the total amount. The total amount is 15,000 units in unit column. After sum up all the values, you will get the total cost is 60,000 rupees. The same values will be enter on creditor side as the total 15,000 units and 60,000 rupees. Okay, so the output value of the process A at the end of the process A is 15,000 units and 60,000 rupees. Okay, against this output is to be transferred to process B account. At the end of the process A's output is to be transferred to process B account as the input. So you are going to write by process B account because this value is to be transferred to process B account. Okay, then we need to find out the cost per unit. Okay, how can you find out the cost per unit? Listen, we have the format for the total cost divided by output unit. What is the total cost for process A? 60,000 rupees. What is the output for process A? 15,000 units. It is to be divided. After divided, you will get 4 rupees per unit. The cost per unit is process A is 4 rupees. Okay, so it is to be entered here. 4 rupees. Process A's cost per unit is 4 rupees. The output is, what is the total cost? 60,000 rupees. What is the total output unit? 15,000 units. Okay, then now we completed the process A. Now we are going to start the process B account. Okay, listen, let's see the question. What are the items they have given for process B account? Listen, if take the process B account, there is no raw material value. Okay, other direct material is given here, direct wages given, overhead value given, output unit 14,000 is given, right? Then opening stock 6,000 units and closing stock 5,000 units. So opening and closing stock is given, output value for 14,000 units is given, raw material is not given, right? So come to the process B account. Whenever they have given the opening stock and closing stock, you always started with the opening stock. Okay, you know the final accounts, trading account. If they given the opening stock, you always started with the opening stock and ended with the closing stock. Okay, as per that format, in process of B account, we started with the opening stock on debtor side. What is the value? 6,000 unit. That 6,000 unit is to be multiplied with the cost per unit taken from process A. So previous process cost per unit is to be multiplied with the opening stock unit. You will get the value of opening stock 24,000 rupees. Got it? The same as closing stock. When you completed the opening stock calculation, let's come to closing stock. Where is closing stock will appear? If the opening stock is appear on debtor side, of course the closing stock is to be appear on creditor side, right? So for that, by closing stock, how much unit they have given? 5,000 unit. So that 5,000 unit closing stock also used to be calculated with the previous process cost per unit. What is the previous process cost per unit? 4 rupees. The previous process cost per unit is 4 rupees. Okay, it is to be calculated. Previous process cost per unit 4 rupees is calculated with the opening stock unit and the closing stock unit. Okay, so already we calculated opening stock unit 6,000 unit into 4 rupees. You will get a 24,000 value. Similarly, the closing stock input is 5,000 unit. It is to be calculated with 4 rupees. After multiplied, you will get the closing stock value is 20,000 rupees. Okay, entered. Listen. Then what you do? We need to take the previous process output is transferred to current process input, right? What is the current process? Process B. What is the previous process? Process A. Process A's output is 15,000 units, 60,000 rupees. So process A's output 15,000 rupees, 15,000 unit and 60,000 rupees is entered as input for process B account. Okay. Against this value, you are going to write to process A account. It is to be transferred, right? So after you enter the process A account at the opening stock and closing stock, listen, then as usual you are going to enter all the cost on the debtor side. What is all the cost on the debtor side? Other direct materials 20,000 rupees, direct wages 20,000 rupees, overhead 8,000 rupees is entered. Now we to sum of all the values of the debtor side. So let's take the unit column. Sum of 6,000 plus 15,000, you will get the total unit is 21,000 units. Okay, then the total cost add together on debtor side, you will get 1,32,000 rupees. The same value is to be entered on the creditor side. Okay, as the total 21,000 units and 1,32,000 rupees. Then listen, the output they have given on process B account. What is the output? Listen, input always enter on debtor side, right? Similarly, the output unit also enter on creditor side. As per the format, input goes to debtor side, output comes on creditor side. So the output value 14,000 rupees is given in process B account. So that output we enter is to be enter on creditor side unit column. Okay, 14,000 units enter on creditor side as the output. Okay, so when you enter the output, against this value you are going to write by process C account, because this output process B's output is transferred to process C next process account, right, as the input, right? So for that 14,000 unit is the output. It is goes to process C account. Okay, listen. What is the total cost? The total cost is, now we need to find out the balancing figure. The total cost is 1,30,000 rupees. It is to be subtracted from the closing stock value. What is the difference? Different value you will get after subtracted 20,000 from the 1,32,000 total. You will get 1,12,000 rupees. Okay. So what is the output value? 14,000 units and 1,12,000 rupees. So against this value you are going to write by process C account, because the process at the end of the process B, output is to be transferred as the input of the process C account. Okay, so it will be entered. Then come to find out the unit column. We need to calculate the unit column. Okay, what is the total unit we have? The total unit is 21,000 rupees. Then you need to sum up the value of Creta side, that is a 14,000 unit output and a 5,000 unit closing stock added together, you will get 19,000 unit. Okay, that 19,000 unit will be subtracted from the total unit of 21,000 unit. You will get 2,000. The different value is 2,000 unit, right? The 2,000 unit again, this you are going to write by wastage balancing. This is the balancing figure in unit column, because in unit column we have the total unit is 21,000 rupees. The output value and the closing stock value add together, you will get 19,000 unit. That 19,000 unit is to be subtracted from the 21,000 rupees. Those 21,000 units, you will get the balancing figure is 2,000 units. Okay, against this you are going to write by wastage 21,000 units. Okay, sorry, 2,000 units, right? We completed the process B account. Let's start the process C account. Okay, write the heading, you know very well, process C account. Let's see the question. What are the items they have given in the process C account? Raw material is not given. Okay, raw material was value is not given, and other direct material, direct wages, overhead, output units 17,000, and the opening stock 5,000, closing stock 1,000 units. Okay, let's come to process C account. When how much unit they have given the opening stock value is 5,000 rupees units. Okay, whenever they have given the opening stock, first entry you are going to start with the opening stock on debtor side. Okay, so in process C account, you always started with the opening stock. If they given the stock value opening stock, you started with the opening stock. Okay, let's start opening stock. To opening stock, how much unit they have given? 5,000 unit. Okay, listen, if you get as per the format, if the opening stock is appear on debtor side, the closing stock is to be appear on creditor side, right? What is the closing stock value? 1,000 units. Okay, so the opening stock and the closing stock units is to be calculated with the previous process cost per unit. What is the previous process cost per unit? Okay, so let's prepare the previous process cost per unit. Listen. Okay, we divided the previous process. How can you calculate the previous process cost per unit? We divided the total cost divided by 14,000 units output. You will get the previous cost process cost per unit is 8 rupees. Okay, process B's cost per unit is 8 rupees. How can you get it? Total cost divided by total output unit. Total cost is 1,12,000 divided by total output 14,000 units. You will get the cost per unit is 8 rupees. Okay, so the opening stock of the process C is to be calculated with the previous process cost per unit. Okay, 8 rupees. So the opening stock is 5,000 unit. It will be multiplied with the previous process cost per unit. You will get the total cost value is 40,000 units, 40,000 rupees. The value of opening stock is process is opening stock is 40,000 rupees. Okay, let's come to closing stock. Closing stock value, closing stock. How much unit they have given? 1,000 unit. The 1,000 units is to be multiplied with the previous process cost per unit 8 rupees. You will get the closing stock value is 8,000 rupees. Okay, so what I say, the opening and closing stock units is to be multiplied with the previous process cost per unit. You will get the value of opening stock and closing stock. After you enter the opening stock, find out the value of opening stock. Then you, as usual, as per the format, the previous process output is to be enter as the input for the current process account. Okay, what is the previous process output? The previous process output is 14,000 units and 1,12,000 rupees. Okay, it is to be enter on unit column 14,000 rupees and 1,12,000 rupees is entered on process C's debtor side, it is considered as input. Okay, previous process output is considered as the input for the current process. Against this value, you are going to write to process B account. It is to be transferred. Within the bracket, you are going to write transfer. Okay, after transfer the output as the input of process C. Now we are going to enter the cost of the process C. What are the costs related to process C? Other direct material 10,000 rupees, direct wages 30,000 rupees, overhead 20,000 rupees. Okay. Then we need to sum up the total on debtor side. Okay. Let's come to unit column. 5,000 unit plus 14,000 unit, you will get 19,000 units. Then sum up all the costs related to debtor side, you will get the total cost is 2,12,000 rupees. The same value is to be entered on creditor side as the total 19,000 units and 2,12,000 rupees. Okay, listen, we have the output value of creditor side. How much they have given? The output value of creditor side, the output value of process C is 17,000 units. So that 17,000 units output is to be entered on credit side. Okay, input is entered on debtor side. Similarly, as per the format, output is to be entered on creditor side. The 17,000 units output be entered on process C's creditor side. Listen, let's find out the output value. Okay, let's take the total. How much total we have? 2,12,000 rupees. Okay, it is subtracted from the 2,12,000 rupees subtracted with 8,000 rupees, you will get 2,04,000 rupees. The balancing figure is 2,04,000 rupees. How can you get the closing stock value 8,000 rupees is subtracted from the total value 2,12,000 rupees? You will get the differences 2,04,000 rupees. This is called output value of process C account. What is the output unit? 17,000 units. Okay, the output value is 2,04,000 rupees. Against this, you are going to write. Against this value, you are going to write by finished stock account. Okay. So at the end of the process C, we have the output that is 17,000 units. They have given the question. Now we calculated the value that is 2,04,000 rupees. Okay. This value, against this value, you are going to write by finishing stock account. It is to be transferred. Okay. We need to find out the cost per unit and unit column. Now we are going to calculate the unit column. Come to the unit column. Okay. Listen, what is the total units? The total unit is 19,000 units. Okay. Then we need to sum up the value of output value 17,000 units and the closing stock value 1,000 units. Add together, you will get 18,000 units. Okay. That 18,000 unit is to be subtracted from 19,000 units. You will get 1,000 units difference. Okay. The 1,000 units is called as balancing figure. Okay, so against this value you are going to write by wastage balance. Okay, now we need to find out the cost per unit. How can you find out the cost per unit? Total cost divided by output. What is the total cost they have given? We find out the total cost is from process C account is 2,04,000. The total output is 17,000 units. Then we divided, you will get 12 rupees. The cost per unit is 12 rupees. Okay. What is the cost per unit? 12 rupees. So we find out the cost per unit for each stage. That means process A's cost per unit is 4 rupees. The total cost of the process A is 15 units and 60,000 rupees. Similarly, process B's cost per unit is 8 rupees. The total cost and the total output is 14,000 units and 1,12,000 rupees. Okay, let's come to process C account. The process C account output is 17,000 units to 2,04,000 rupees. Okay, the cost per unit is 12 rupees. Okay. Do you have any doubt? Please comment it to the comment box. Thank you. Take care.